He talked very eloquently about space travel. My wife turned to me and said, "This guy is a genius." What?
Nobody disputes that.
I found him engaging, brilliant, exciting. No one in the world has his vision right now. He's just a visionary like I've never seen. And things go through his head.
They go through his head and then they actually happen.
They happen.
That's what's different.
Yeah. He's having fun. He's disrupting. He's changed the world in a positive way. I'm all in Musk.
In this video, Jim Cramer praises Elon Musk, proof Tesla stock is way too cheap, Tesla insurance, which will generate billions of dollars of profits, continues to expand while flying under the radar, and VW CEO admits defeat. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. Less than a week away from Tesla's Q4 earnings, which will blow all expectations completely out of the water, you can count on it. Tesla stock looking like the bargain of the century, having gone literally nowhere since their huge Q4 delivery beat. And when I say literally nowhere, I actually mean it's gone south. Tesla stock peaking around $1,200 per share and then tumbling off a cliff, down almost 17% since. Historically, there's been a very tight correlation between Tesla earnings estimates, the Wall Street consensus, and the price of Tesla stock. Obviously, over time this fluctuates. Sometimes Tesla stock price is ahead of estimates, other times it's behind. What we're seeing here is a stark disconnect. 2022 earnings estimates have been climbing dramatically for Tesla since their blowout Q4 delivery results, and I'm telling you guys now, these will continue to climb throughout the year. Yet because of the panic in the market around the macroeconomic environment, interest rates, the Fed, blah blah blah, Tesla stock lagging dramatically behind earnings estimates. I personally believe at some point in the near future, this will correct itself and we'll see Tesla stock shoot up in a relatively short period of time, getting close to or even exceeding the average correlation with earnings estimates, keeping in mind that the estimates are going to continue to climb month after month and quarter after quarter, especially in the wake of Tesla's Q4 earnings results in 1 week's time. Next, some breaking news. Tesla insurance, which will literally make billions upon billions of dollars in pure profits every year in the future, continues to expand while simultaneously flying under the radar. As we can see here, Tesla Insurance has launched in Arizona and Ohio. That makes it 5 states in total now offering Tesla Insurance. Obviously, the rollout will be slow, different laws in different states. It's a very arduous process, but over time, this insurance product will become a no-brainer for Tesla customers globally. The reason is very simple. Tesla has access to data that no other insurance company has access to, telemetry of the vehicles themselves. Tesla's software and data expertise allows them to access this data and price insurance accordingly based on the capabilities and safety of their drivers. The other kicker here is that over time, Tesla vehicles continue to get safer. We've seen the data, accidents per million miles falling dramatically for Tesla vehicles, whether or not they're using autopilot, whether or not they've got active safety features. So what this means over time, less accidents, therefore less insurance payouts, therefore either a more profitable insurance product, great for Tesla shareholders, and or a much cheaper insurance product. Typically, insurance companies who don't have access to telemetry, and no one will ever have the same level of access to data that Tesla has of their own vehicles, they use actuaries to price risk based on age, gender, marital status, all kinds of random things. This is a very blunt, coarse technique that doesn't price insurance accurately per driver. In short, at some point in the short to medium term, no insurance company will be able to compete with Tesla Insurance on insuring Tesla vehicles. They simply will not have the data. They won't be able to price risk accordingly. In addition to that, as I mentioned, the vehicles get safer over time, therefore less accidents. It's a win-win. And the impact this will have on Tesla, the business financially, cannot be overstated. At some point in the future, Tesla will have a fleet of vehicles globally well in excess of 100 million. If you're a little bit unsure how this happens, maybe do what I'm doing and use a calculator. It's actually quite simple. Let's just say 20 million vehicles produced in 2030 alone, plus you've got all the production in the 10 plus years prior, plus production in subsequent years as well, blah, blah, blah. You guys get the point. So let's do some really rough numbers. Don't get your panties in a twist. If you want to see the specifics and what I actually think will happen here, I actually have this all available in my Tesla valuation model. If you're on Patreon at the investor support level or above, you can see all of my assumptions all the way out to 2031. Profitability, revenue, take rate, etc. But just to give a really simple example, let's imagine there's 100 million Tesla vehicles on roads at some point in the future, each of them with Tesla insurance. Obviously, the take rate probably won't be 100%, but what if the fleet's 120 million, 150 million? Let's just say hypothetically that Tesla, because the vehicles are so safe at this point in time, Tesla insurance is a mere $35 per month. So we now multiply that out by 12 months, and we're looking at approximately $42 billion per year in revenue. Fancy that. The question is, what will be the profit margins on this? Well, let's just say conservatively 25%. Simply multiply that, and we end up with approximately $10 billion of profit per year based on Tesla insurance across a fleet of about 100 million vehicles opting for the product at just $35 per month. For some additional context, please, I challenge anybody out there watching today to try to find insurance for a vehicle for $35 a month. Good fucking luck. And need I remind you that insurance isn't a one-off expense, it's recurring. People typically insure their vehicle while they have a vehicle. So every month, every year, Tesla owner buys a vehicle, continues to use Tesla insurance, the money keeps rolling in. Next, Jim Flip-Flop Cramer giving some well-deserved praise to Elon Musk.
Too much. He came in with his kid.
Yeah.
He talked very eloquently about space travel. My wife turned to me and said, "This guy is a genius." What?
Nobody disputes that.
Yes, genius. And I found him engaging, brilliant, exciting, and he's ours. He's American. Well, I mean, I could consider American. And no one in the world has his vision right now. He is, except for maybe Jensen Huang. But he's just a visionary like I've never seen. And things go through his head like, Einstein, Beethoven,
He actually
Mozart.
They go through his head and then they actually happen.
They happen.
That's what's different.
Yeah. He's got a pixie-ish grin, and he attacks people when he thinks that they're stupid, but he's having fun. He's having fun. He's disrupting. He's changed the world in a positive way. I'm all in, Musk.
So Jim Cramer finally coming around to Tesla despite the fact that he's more bullish on Ford stock. Holy f***, dude, how can you be so smart and so dumb at the same time? Keeping in mind that in 2010, around the Tesla IPO, Jim Cramer famously said, "Don't buy the stock, don't even rent the stock." That didn't age so well. Point is, it's great to hear Cramer giving well-deserved praise to Elon Musk, in fact now saying that he's all in on Elon Musk, yet still strangely suggesting that Ford stock's a great buy at this point in time because of their EV plans. The plans that are competing with Tesla. Good luck with that. And now, Herbert Diess of Volkswagen admits defeat. Herbert Diess recently spoke to The Verge. Here's a few snippets, a few select quotes from that discussion. There will be a lot of growth in the area of EV charging and batteries, and I'm sure that we will find investors to participate, but we can't finance all of the necessary investment out of our cash flow. In other words, VW, who already have a mountain of debt, will need to take on more debt in their attempt to transition to EVs. They can't finance this with the profits they're generating currently. Oh yeah, and then there's the whole collapsing ICE vehicle sales thing happening at the same time, compressing margins on their ICE vehicles before no one's buying them whatsoever, meaning that VW's profits today are about as good as they're going to be for years to come, possibly forever. Not looking pretty. 50% EV by 2030 is extremely ambitious. By the way, again, I just want to put it on the record. They're not aiming for 100% EVs by 2030. They will be bankrupt. If we own in Europe about 20% market share for that 20% market share to maintain 50% EVs, in other words, 20% market share of the EV share, which are expecting to be 50%, it's going to be way above that. We need 6 gigafactories. Those factories would have to be up and running by 2027, 2028 to deliver on our 2030 goal, which again is way too low. It's close to impossible to do that. I just want to emphasize, this is the CEO of Volkswagen, Herbert Diess, saying it's close to impossible for VW to achieve their piddly little, far too small goal. Quote, "We are only 20% of the market, so 6 plants. Europe needs 30 of those plants. Each plant is 2 by 1 kilometer." I think he's talking about the dimensions of the factory. Translation, for those of you watching who use the world's dumbest measurement system, that's gigantic. Then to, let's say, get from 50% to 100, it will still be a tremendous challenge. It's not just saying let's switch off ICE cars. It's just impossible. An important word there, Impossible. Here's some comments from Alex, who posted this tweet thread, not from Herbert. The CEO of the VW Group does not believe that the company can switch to 50% electric vehicles or even 100%. Many who listen to the VW Group believe that the company plans to switch completely to electric vehicles, but this is confirmation that they do not even have a plan to do so in Europe, let alone the rest of the world. Absolutely spot on. And now a quote from Deese about stopping ICE sales in the US. Quote, "Some of our peers are making statements, and I'm not sure whether they should do that. You have to ask yourself, do I have the primary energy? Do I have the networks? Are the people prepared to switch to EVs? Do they have the right incentives?" This is a complicated statement here from Deese. On the one hand, he has some valid points. The companies like General Motors saying that they're going to be all in on EVs by 2069 or whatever it is, have got no idea what they're getting themselves into. They haven't sorted supply chain, they don't have technology, they don't know what the fuck they're doing. They're not going to be able to deliver on their plan. So Deese has a point. On the flip side, people are certainly prepared to switch to EVs providing they aren't steaming piles of shit and providing the price performance makes sense. Tesla's already at this point in time, other automotive manufacturers not there. So again, relatively fair point, but there's a bit of nuance there. Another quote from Deese. "My outlook for 2022 is very, very positive, except for the chip supply. We suffered a lot. We lost market share in China, the world's most important vehicle market, particularly electric vehicles, because of the chip supply, and in Latin America because we prioritized the higher spec cars and the premium brands." And now a few more snippets from the full article. This is Herbert Deese. Quote, "You can learn everything now. This American competitor, Tesla, shows that you can do stunning things if you're really committed. What I'm saying is, don't expect you can do this game in 1 or 2 or 5 years. Tesla is a case where it took 15 years and it took a lot of resources. I don't know, $15 or $20 billion to get to profitability. Don't believe that just any of these startups showing one car at a motor show will succeed." Hit the nail on the head there, Deese. I think most of these companies will be bankrupt within 5 years. Not going to name names, but if you're a regular viewer of the channel, you might know some of my thoughts on this. Some of them we take seriously. Notice how he says some, not all. But I'm quite sure that not all will have the substance and durability to compete, and I totally agree. I think most EV startups won't survive the decade, and I also think most legacy automotive manufacturers won't survive the decade. The net effect here, less automotive manufacturers at the end of this decade, and those that succeed, 1 or 2 of them will take the lion's share of the electric vehicle market. And clearly, given the fact that I'm still all in on Tesla stock, I personally suspect that Tesla is going to be the company with by far the largest market share. So the fact that Herbert Deese knows VW are completely and utterly fucked shouldn't surprise anyone. He's a pretty switched on guy. He's been shouting about EVs for years, doing everything he possibly can to accelerate VW's transition to full electric vehicle production. What's relatively surprising, however, is the guy has the balls to now admit openly that they're fucked. And by fucked, I mean that they can't even get to 50% EV production in Europe by 2030, literally using the term impossible. Remember, in just a couple of years' time, maybe 2-3 years at most, it will be cheaper for consumers to buy an electric vehicle in terms of purchase price than an equivalent ICE vehicle, and it'll be way cheaper, it already is way cheaper today to actually own and maintain. At this point in time, you have to be a moron to buy an ICE vehicle. At this point in time, automotive manufacturers who are still selling ICE vehicles are going to see their sales plummet. As their sales plummet, economies of scale work in reverse and they start making less and less money on each vehicle. At the same time, they struggle to ramp up their EV production while Tesla is literally years ahead and shitting all over them in terms of price, features, functionality, performance. Doesn't end well. I'm personally expecting electric vehicles to make up very approximately 50% of the new vehicle market in 2026, 5 years time, half a decade away. By the end of the decade, 80-90+%. Obviously, I don't know for sure. The S-curve could move a few years either direction, but this is approximately where I'm at. If VW can't even get to 50% of their new vehicle production electric at the end of 2030, just in Europe, this is an admission that they are absolutely fucked. And what's more, of all the legacy automotive manufacturers, VW are the most aware of what needs to happen. They have the biggest head start, obviously not including Tesla, but of all the dinosaurs trying to transition to EVs. They know what they need to do, kind of. They've been trying to move in that direction for years. They actually have a number of electric vehicles on the market compared to a lot of legacy auto companies who don't even have a single electric vehicle currently for sale. And yet Herbert Deese is openly admitting they're not even going to be able to get to 50% EVs in Europe by 2030. What do you think the implications are for the rest of the legacy automotive industry? If you've been paying attention, I'm sure you'll be able to fill in the blank. They are completely and utterly So, while Tesla stock continues to be dramatically undervalued, Jim Cramer is now praising Elon Musk, all in on Elon. I mean, quite a statement, but better late than never. The rollout of Tesla Insurance continues to fly under the radar, despite the fact that Tesla Insurance will ultimately produce tens of billions of dollars in annual profits. And Herbert, who I admire for having the balls and brains to say what he knows privately, actually say publicly, it's going to be impossible for us to meet XYZ goal, aka we're completely fucked. So, see you guys and girls in the next video, and don't forget, if you want access to my Tesla valuation model with all of the assumptions around Tesla Insurance, etc., hit the card in the corner or the link in the pinned comment. You'll gain access to that at the investor support level and above. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.